So guys, you guys can hear me. We are starting our today's topic should be time and price. Okay. We are starting now, so anybody that comes now should be able to just join us. And I'm not repeating myself because I told you guys that we should start exactly 9 o'clock. I'm starting exactly 9 o'clock. So happy Sunday, guys! And our today's topic will be time and price. Uh, and understanding time, you need to time in trading is not just about session or it's not about session or just time zone or Asian session. Okay, obviously there are three different time zones in trading. There are Tokyo session, sorry. There are Asian session, there are New York session, there there is London session. Like these are the three major time we have in forex trading: Asian session, London session, and New York session. And understanding this time session deep down, so because you can't trade pairs. For example, now let's just use USD pairs for example. You can't be trying to trade USD pairs on Asian session because the volatility of USD pairs comes in New York session. It's not like it's not going to move on Asian session though, but the volatility of that pair when is the volatility of that pair comes in its section, its time. So you can't just it's not like it's not going to move in Asian. No. It's not. It's going to move in. Obviously, going to move in Asian because time doesn't. Price doesn't stop. But the volatility, you should be trading a pair when it's volatile. When you know that okay, fine. When I enter, it's going to move. So you can't be trading USD pair on Asian session. You can't be trading USD pairs, some USD pairs on London sessions. For example, let's go to chart. Let's go to chart to know if we can, so that you guys can understand what I actually mean. This USD, sorry, this US dollar index. So going on 15-minute time frame, then let's see. Then probably let's add our section indicator, then section. Right. Yeah. Let's add our section. And yeah, okay, sorry. This is our section. I don't know if you guys can see it properly. This is our section. Let me zoom it more. This is Tokyo section. This is London section. This is New York section. This is Tokyo section. This is Tokyo section. The orange one is New York section. The Tokyo is purple. Then the London is light blue, I guess. So if you understand, this is US dollar index. And if you check the majority, like when this pair has the major volatility, sorry, you see that it's New York session. Okay, let's start with here. This US dollar index. This should be New York session. The time zone, this volatility should be around this, should be New York session. because New York section starts around 12 o'clock, and this is one. This indicator, let's move it. I don't know. This indicator is not giving me what I want. The time section is not correct. So if you check this 1 o'clock, this New York section, that and this should be this NFP news. This is when it has the high volatility. Let's go back again. This is 15 o'clock. That's around 3 o'clock. This is when it has the high volatility. It's not like it doesn't move on other sections. It moves on other sections, but the volatility comes in when the section of that market opens. I don't know if you understand what I mean. Are you guys understanding what I mean? Because you guys should talk, because I feel like I'm talking to myself right now. Charity,
we are understanding.
Okay. Thank you. So the volatility of the market comes in when the section is the pair is in the section, more like it. So for example, Euro USD. So if you check Euro USD is a combination of JPY USD. JPY USD is a combination of London and New York session. It's a combination of London and New York session. And if you check, let's just start randomly. If you check here, this Tokyo session, this Asian session, the price barely moved. It came, these are more 6 o'clock, 7 o'clock, which is 7 o'clock London session. That's I just say 8 o'clock time open of banks and stuff like that. The market, there was a volatile moment in the market. Then after that, this is that of 8 o'clock, this is 8:15. From 8:15, the price started moving. Then entered London session. The continuation continues. Started moving. And also coming back to this Wednesday, this Thursday. Let's come back to Thursday. You see Asian session. Asian session was just ranging. Then we enter 7 o'clock. That's London session, 7 o'clock. Boom. See the volatility in the market. Till we back to Asian session again. The price started ranging. 8 o'clock. This is 8 o'clock. You see the volatility. Same. This Asian session. Then it's not like the price doesn't move on Asian session, but it moves with less volatility. But more likely, the volatility comes in because there is a collision. There is a collision between sessions, whereby the Asian session and the London session are still open. Like let's say for example now, between the time of this 7 o'clock till around 10 or so, the Tokyo session is still open. So that, like from there, the volatility comes in. Let's check another pair. Like Euro USD, Euro JPY. Because let's not just use London and New York session, for example. Because the reason why I'm in London and New York session because during the same session, 90% of us will be sleeping obviously. That's like during night in Nigeria. Obviously, I assume everybody here is in Nigeria. So that's like nice Nigerian time. So everybody here will sleep. So I'm not putting Asian session in consideration. Because okay, let's look at this pair now. This UJPY, which is London and Asian session. They are mostly volatile in London and Asian session. Let's look at this pair. This is Asian session. These are entry. You see the volatility. This volatility. It came to London's New York session. The volatility reduced. Back to Asian session again. The volatility came in. To London session. Then New York session, the volatility reduced. Then back to, you see, the best time to trade a pair is during the section. I don't know if you guys understand what I mean. The best time or the best move you can see in a pair or you can get in a pair is during the section. Because see this down push now. This was during this Asian stroke London. Then it came to New York. See the consolidation. It started ranging. But this move was Asian New York move. So you have to understand the time at which you are trading the price of the market. The time at which you are trading this market, because if anyone decides to trade, let's just say for example, someone decides to trade during New York session, the market will barely move because there is no volume. The volume in the market, the volume of the market is already gone. Because the volume in the market comes in Asian and London session. That's when the Japanese banks open and the London banks open. After that, there's no volume. There's no more volume in the market. The market is likely to consolidate more of during. It's not like it doesn't move during the New York session, but it consolidates is more often during New York session. So you have to understand that when trading a pair, I don't know which pair you are trading or which pair. Like let's take a random pair again, like AUD, NZD, anyone, about AUD USD, for example. Let's take AUD USD. Before this AUD USD is a combination of Australian dollar and USD. That's the Asian session and the New York session. Sorry. Like I said, it's not that it doesn't move. Like you see London session now, this pair moved. It's not like it's not going to move in London session, but the volume comes in majority in New York session. This Asian session, this is the volume that came in. Volume came in London session though, but it's not like. But the majority of the time, the volume comes in Asian and New York session, because this is an Asian and New York pair. ADUs is an Asian pair. Then USD is an American pair. So understanding price and time is very essential in trading, because, for example, now let's use this gold as an example. This gold, 90% of the time, the major move comes in the market in New York session, because this is gold against US dollar. It's not like it's not going to. You're not going to see potentials in other aspects or other section like Asian, but the major 90% of it. So you need to be. It's not. You can't trade everything. You definitely can't trade everything in this market. So just pick that. Okay, fine. This thing is going to move well in New York session. Focus on New York session. You definitely see opportunities in New York session. Focus on that time. Focus on the time of which the pair moves the most, or which volume there is volume in the market the most. For example, now someone trading gold in Asian session is probably like, because this volume from here comes in from London. Okay, let's say there was volume in London session. Then to New York session, there is volume in this market. This move. You can't compare this move now to this move. You can't compare this move to this late Asian move. So what are you doing at the chart during Asia? Close your laptop or close your phone or anything. Focus on when the pair moves the most. So understanding price, because sometimes it's not like I won't say it's not like a mod, because sometimes you can see a pair even ranging, because this gold now. These I would say, well, there was volume in it. There was volume here. I want to look for when gold range during New York session. Consolidated during the next session. Okay, if you look at here, from year to year, this is New York session. This was New York session. But price didn't really move much because there was no volume in the market there in this section. That doesn't mean that there is no volume during the New York session, but majority, that doesn't mean that 90% of the time or 100% of the time that market is going to move. But 90% of the time, market is going to move. This gold is going to move more on New York session. So you should be looking potential in London's New York session. That's why you should be looking potential to enter this gold. Okay, look at Asian session. Look at Asian session. What are you looking at to trade gold in Asian session? This is the volume. This is the volume in Asian session. You shouldn't be doing anything there because what are you going to trade? What are you going to trade there? The volume is not there. So if you're not trading gold on this Asian session, there's no volume here. So it's either you are trading London session or you are trading New York session in gold. But most especially, you should be looking at gold in New York session. Because most of the times, London session is just for manipulation and taking out highs and lows and stuff like that. But the major moves is in the New York session. The major move in the market is in New York session. So you have to, first of all, before you enter, you have to understand what is price. What is price doing? What is, okay. Let's say, for example, now, let's look at this from year to year. During Asian session, price consolidated till year. So here, then let's just say let's use 8 o'clock as the start of. See, price consolidated. The New York session was also take out lows, take out this low of Asian low. Asian low was looking at, and now the major move of the market started because the actual move of the market was up. This move was just to take out the lows. And let's just say, for example, you were, because of this move now, we thought that the market was moving down because obviously we broke this low. You broke this low, you broke this structure. So probably you're expecting that market is going to continue downward. If you enter this trade, you'll be stopped out. You'll be stopped out. No matter where your stop loss is, you'll be stopped out. But assuming you came in during, let's just say you came in, for example, in the London session or New York session. Okay, let's just say you came in the New York session. You saw this move. This low has been taken out. Market broke this structure. Market took out this low. Sorry. Price came, took out this low, broke the structure. Can probably set your limit here. Then you stop here. Then you probably target anywhere you want to target. So understanding price and understanding time and price movement is very important in trading because it helps you avoid unnecessary losses. It helps you avoid unnecessary losses and stuff like that, especially when you are not that, let's say, pro or something like that. But it's better to focus your attention on the major move in the market. Okay, this gold now, for example, now this gold now, for example, now, let's just say anybody. Network. The market will probably continue from there. The market will probably continue from there. You'll be stopped out, neglecting that price. The random session was just manipulation to take out the high. This is the high of the previous day. Market took it out. This is the previous high, previous day high, and this is the previous day low. So once I see that the previous day high has been taken out, I should be expecting to sell. I should be expecting to sell here. If I go to lower time frame now, I'll probably see let's go to lower time frame. Let's look at that trade. This is it. We go to lower time frame now. This is the structure the market needs. I'll probably be trying to sell here on this swing high. Set my limits here. Then my stop loss, if it takes me out, fine. If it doesn't take me out, fine. My first TP will probably be this low because I know that that's where the price is targeting. My second will be this low. Then if I want to hold it low, then I will go for the low of the week, the low of the previous day, which is this one, and price took it out. Nice 1 to 5 on gold. We're out of the market. We are done for the day. New York session only. Same with this Monday. So, like I was saying, I'm not going to talk much on time and price because I feel like time and price is something that you guys already know. You guys know Asian session, you guys know London session, you guys know the what I say, all this word again. The bit of London and Asian session and the bit of New York and London session. The interconnection between those sections. You guys already know because I feel like you guys know the section of the day. So it's just understanding the price of the market in those sections. Understanding the price on what the price is actually doing. Normally, like this time and price, I'll probably in a few minutes now. I'll probably go to supply and demand because I don't feel like I need to. There's nothing much to explain on this time and price because it's clear. Understand any pair you choose to trade, be it low USD, long MO, BUSD, JPY, or the NZD USD. Name the pair. Go and check the zone or the time of that pair. Let's just say NZD USD. You should be looking at London and New York session only. All these other NZD Asian and London session. Go and check. I'm not telling you. Okay, I'm not telling you this. Believe me. Go to the charts. Look for that pair that you want to trade. Know when volume comes the most. It's much like I'm telling to you. So go and check. Go enter the chart. Check. If it's really the trading, go to the check. Diamond, and tell me where you see volume in the market. You know, the most volume there in the market, London and New York session. I'm not telling you to believe though. So you probably go to the market and see for yourself, test it yourself, test it yourself. Go back to time. Know when the market moves the most in the pair that you are trading. And when you know the market moves, what are you doing when market is not moving on that pair? Imagine if you're on a buy trade on this for example. Let's say for example, bruh. Let's just use here as an example, bruh. Enter there. Well, you might be in profit. But if you didn't take your profit, probably you are targeting this high or something like that, or probably you are targeting this high or something like that. For example, you are targeting this high. If you didn't take profit or break even or take partials here, Market to come back and stop you out. You'll be like, oh, I would have taken profit. Like, yo,
Excuse you.
sorry, who is speaking?
It's Jerome. It's like we can't see your screen again.
You can't see my screen.
I don't know if it's
Sorry,
just from my phone.
sorry,
No,
sorry.
I can't see your
You
screen
can't see your
likewise.
screen. You can't see your screen.
Okay, okay. Sorry, sorry. Can you guys see it now?
Yes, I can see it from
Yes.
Okay. So if you probably traded this thing now, unless you could have probably you went for this high, which I doubt most people will go for, because most people will probably go for this high. Probably go for market didn't reach there, and if you didn't take profit, and if you didn't take your profit or take partials, would have been like, oh, I would have. So, but assuming you waited for New York session or London session to start. This is 1 o'clock. Or 1 o'clock, 2 o'clock. This is the start of New York session. I probably saw this move. First of all, market took out previous day high. Even if you saw this thing and you're expecting a buy on this trade, but at least you know that market, immediately this market took this high, it's going to reverse normally now. At least your this thing, your short position is going to be here.
Ogunu.
Sorry guys, my network. I don't know if you guys can see me, but my network was a bit bad. Sorry
You
guys.
can hear you. I can hear you, but I can't see your screen any longer.
Yeah, sorry, my network was bad. I think that's why everything cut. Yeah, I'm sharing my screen now. So you guys can see my screen. So yes, my network. Sorry about that. So like I was saying, I don't have anything other things to. So all you have to do is just go that pair you are trading. That pair you are trading. Go and know when, what time zone, or what time of the day, or what time does the pair has much volume in it. Then when you find out what time it is, that's when you should be on your screen, because that's when the most opportunity comes in. That's when the most opportunity comes in. So I think unless anybody has any question, but if nobody has any other question, then I think I should be ending this topic and ending and going to supply and demand. Does anybody have any question, please? Well, I'm guessing nobody has anything. This one you guys are not talking. Does anybody have any question on this price and time and price? Sorry.
No questions from here.
So I'm guessing you guys understood everything I said. Yeah, who's talking? So if everybody agrees with me that they understood everything I've said, then I guess we should be moving to supply and demand. I'll be ending this call and I'll be calling you guys back again for supply and demand. Because you guys don't have any other question again. So I'll be ending this call and I'll be calling you guys on Wait, I'm not. Let's just continue from there.